What do you got? 7.
This is 7.
All right, so you're 100% number 1.
No way. Really?
Yeah, why do you guys...
That is awesome.
Is
Why
there
do we keep inviting you?
a lot of people canceling or something?
We love you.
Do you guys get a lot of no's?
No. We don't get no's anymore.
It's not a assertion.
What is that? Oh.
Dude, we were just talking about Mr. Buffett.
Look at this.
So actually, you know what?
This is awesome. Thank you.
Yeah, you bet.
There's got to be a better answer than Warren Buffett as the number 1 person you want to have dinner with. That's kind of a lame answer.
No, it's
Number
not.
1 for what?
Number 1 person you want to have dinner with.
Nicole asked,
Oh,
you could have dinner with anyone living
It's
or
so
dead.
It's so cliche, right?
I said Warren Buffett, but living.
Oh my God.
All right, here's a good question. Nicole posted a video of me walking around last week on YouTube. And I guess most of the videos I'm seated. And people in the comments were like, holy shit, Josh is tall.
People didn't know that? Like, I
No.
thought that was one of like the very known things about you.
Apparently, I give short.
Really?
Yeah,
I'm telling you, there were. Did you see it?
you're very beta.
Did you see how many messages were
No.
like, wait a minute,
No.
Josh is gigantic?
But there's like so many like group pictures of you everywhere.
I guess these are
like
people that don't
CNBC
see the
and-
photos and they just watch the video.
I thought
Yeah.
they were going to comment on the Labubu,
Nick.
which is predictably ridiculous.
Nick,
of course
you
have a
said I
Labubu.
give short energy. What does that mean?
When did I say that?
Last week when I'm like, why is everyone in the
So I talked to Dan on this, and he also thought you were going to be short when he was hired.
Where is he? Bring him to me at once.
Throw Dan under the bus.
Well, Dan thought I would be short also. All right,
Yeah.
there's something about maybe the way I sit that gives like an impression. Is that him?
Not him.
Can you get me, Dan?
Get me, Dan.
Dan's fired.
Where is he? Come here. Get on Duncan's mic. Nicole said that you thought I was short before you met me in person.
Oh, I did.
All right. Why? No, but we're trying to figure out why everyone in the YouTube comments was surprised that I'm tall.
I don't know.
I know why.
Why?
Because your energy is very like aggressive, like you're a short guy trying to be not short.
was that your impression?
No.
No. Why did you think I was short? It just looked like I was?
Yeah, I'd never seen you setting up, and
Okay. All
I
right.
was just, surprised.
All right.
There's no good answer. There's absolutely no good
All
answer
right.
that exists here.
You're dismissed.
You know what? Here's the way to think of it.
For the record, 6'2", 180.
6'2"?
Yeah.
Are you sure it's not like 6'1" and 3/4?
Kilograms?
Is this like a one?
I'm 6'2", and my 16-year-old son is 6'1". I think he's gonna be taller
He
than me.
is?
Yeah.
Wow.
Oh boy.
I think he's gonna be taller than me.
How tall's your wife?
Not tall. 5'3", 5'5" in Louboutins. Yeah. So I don't know. Did you surprised by that? That I'm giving short to the audience? You're not surprised?
I think people are probably getting used to finding out that
I gotta sit up.
people
dude.
in real life are shorter than you expect, like Tom Cruise and
Al
Yeah,
Pacino's
these
4'6".
actors.
Yeah, me and Tom
Yeah.
Cruise. Everyone always says. All right.
So Sam, this has been a week for you. What happened?
yeah, it's been an interesting
Share.
one.
Can we get into it a little bit?
Yeah, sure.
Okay.
sure.
So, you have been displaced from your apartment.
Yeah, I just moved back in 2 days ago.
But not your first rodeo.
Not my first rodeo. So my apartment got flooded.
It's your second rodeo.
Oh, just for the listener, share the street address.
I'm in an apartment building in downtown Brooklyn.
Okay.
In that development area, and I was actually out of town, and I got a phone call from my landlord, saying that the person upstairs left their kitchen sink running.
Oh
But
my
who was
God.
this? Blackstone?
Right, BlackRock or Blackstone? Yeah. One
So
of them.
what? It came through the ceiling or through the wall?
It came through the ceilings and the wall. So, by the time people realize there's a water problem, it's usually already in the wall. That seems to be like the rule with.
Yeah, but then they have to remediate. It's not
Yeah.
enough to just dry it because now you can have mold.
So since this was my second time, I was able to witness the entire process when it happened the first time. And yeah, like by the time the water is still like being mopped up, there's like a SWAT team comes in with like the dehumidifiers and the fans and a guy sawing out all of like the wet drywall.
They have to pull the drywall out and redo it.
Yeah, because
Okay.
of mold and all that stuff.
All right.
And yeah, they just leave industrial dehumidifiers on for like 4 days until the place is like a desert.
So that's 2 strikes on this landlord. All right. For any attorneys in our audience, we might have need of your services if this happens again. I don't think we're going to put up with it.
But how does this work? Because you have to pay for a hotel?
All that gets reimbursed. So the rent, it's either frozen or you get credited for the time you're not able to access the apartment, and then they reimburse you for the hotel, and then anything that's damaged gets replaced.
Okay. And now we have your landlord here. Duncan, would you like to apologize? Is there anything that you want to say to
This
Sam?
hits close to home. I have the same thing happen in Brooklyn.
Yeah, I remember
The
you were
same
telling me
exact
about this.
Where my place got flooded.
two
Yeah.
years ago, a
Neighbor-
couple years ago.
Neighbor went to Europe during the winter and left their heat off, and so their water pipes busted.
Holy
Yeah.
shit.
Well, I mean, that's kind of the funny thing about this. It's not an uncommon story to hear about water damage, flooding, kitchen sinks, and all this stuff. But in that context, I thought my experience 2 years ago was pretty good. Like sometimes this stuff draws on for months.
Yeah.
Like if the landlord doesn't care, or if it's
Well,
not.
that was you. That was you. So what? Well, how long were you out of your apartment for? It was months.
We never went back.
You never went back.
It was months, and there was
Okay.
no date in sight.
Right, and then the everything from like covering mold inspection and
Do you have anything you care about get damaged, or TV or anything?
No, I mean this is actually in my lifetime. This is my fourth flood.
Okay.
You must be
So
uninsurable.
I mean, I don't leave stuff on the ground. I don't.
You're like
leave
the
stuff
wet
out.
bandits. Now, what did being flooded teach you about B2B sales? Nothing.
Kennedy
but
tapped Jack Rains
seriously,
for that one.
The funny thing is, I mean, so
Jack Rains was here this morning. It's funny. I should have asked him.
Oh yeah, he's in town. Yeah.
He's in town. He's making the rounds.
So the B2B story is this. Stuff like this is unavoidable. I mean, you guys are homeowners. You have disasters all the time. I'm
That shit
sure.
happens.
Yes, shit happens.
Every week, something.
Like
broken.
really, the unusual thing would be is if you never have like an issue in your house. Now, if it's happening like every 2 weeks, then that's a whole other story. But once every 2 years, I've had no other incidents in this building, and the landlord's overall great. Like the way that they handle the situation is great. Like Duncan wasn't able to move back in. I'm back in 8 days.
You roll with the punches.
Yeah, I think that's what makes me a greght stock market.
You make content out of the punches. It's perfect. It's even better.
Yeah, I mean, that's the other thing too. I think, I've been scaling down in terms of crap that I keep in my house,
Okay.
and because I don't know what it is, but like it can, some stuff can be kind of like a psychological weight and a distraction or whatever.
Oh, I agree with that.
I don't know what it is, but like I'm most productive when it comes to work when I'm not at home.
Mm.
So like if I'm at like a conference or something and go back into my hotel room for 2 hours, like I could do like 6 hours worth of productivity.
You're not surrounded by all your toys and games.
Right,
and,
exactly.
All right. I'm
All
with you
right,
on that.
so in my 401k, I just put on a trade. Will Sam's apartment flood next year? Thank you, Kalshi, for that.
Yeah, nice. Yeah.
Are you
I'm all
on the prediction markets right now?
Not yet, but I'll make sure that happens because why get insurance when you can just put money on
Self-insure.
Yeah,
Just
I
bet
love
it.
that we've rebranded this as prediction markets and not gambling.
No, it's
Right.
prediction markets.
Yeah, sure
Come
it
on.
is. I love it.
I bet
I don't gamble, I
isn't
predict.
The etymology,
I
isn't like
predict.
the history of
I'm a degenerate predictor.
I cannot stop predicting.
like in Game of Thrones or whatever, the shorthand for the insurance guy was the gambler.
Oh, really?
Yeah.
Good to know. All right. We ready to rock? You guys ready?
Yeah, it's good.
Yes?
All good here.
All right. Duncan, you ready? Okay.
Coming in with 3 claps.
All right, let's do it, Sean.
Episode 203.
Today's show is brought to you by our sponsors at Betterment Advisor Solutions. If you happen to be thinking, there's got to be a better way to grow my RIA, you're not alone. With Betterment Advisor Solutions, we do the heavy lifting so you can focus on what matters most, your clients. From improved service that makes asset transition smoother to fast, paper-free onboarding that delights clients on day one, we've built a digital-first platform designed to streamline your operations and make life easier. Now, if you're thinking, wow, they take the paper out of paperwork, then you'd be right. Grow your RIA your way with Betterment Advisor Solutions. Learn more at betterment.com/advisors. Investing involves risk. Performance not guaranteed.
203. This is a big one. Sam Rowe is back for, you think it's the 7th time?
It's either 6 or 7.
Oh my goodness.
Let's call it 6.9.
6.9.
All right, we're going to read you an introduction anyway, though, okay? Guys, Sam Rowe is the founder and author of Ticker, that's spelled TKER, an award-winning newsletter covering news, data, and insights informing long-term themes for investors and the economy. We love when you come on the show. Thank you so much for being here.
Thanks for
Appreciate
having
it. We'll get a dehumidifier on you right in that corner and dry you out. All right, first-time guest today. You guys, if you've been on financial social media at any point over the last 15 years, you know this dude. This dude is razor sharp, covers the gamut, markets, economy,
Predictions.
you name it. Luke Kawa is the markets editor at Sherwood News, a media and research arm of Robinhood focused on markets, business, tech, and the culture of money. Luke, thank you so much for being here.
Pleasure to be here. Thanks.
Awesome. The crowd's going nuts. I don't know if you could. I don't know if you could hear that. They can't be restrained. So you and I met once before in person.
Yes, we
Okay.
met Jillian Tett's backyard, big
You
financial
were a Bloomberg
Times.
writer at the time.
I was a Bloomberg writer at the time, and you had just wrote something nice about something I wrote. So I was very happy. That was a big deal for me at the time. It would actually still be a big deal for me now if you did that.
wow.
So, yeah.
No, I love your stuff. I've been reading your stuff forever, and when I was active on finance Twitter, you were definitely one of like the key people that everybody follows. So really nice to get this chance to talk in person. Now your accent's interesting. I'm picking up Mississippi.
All right. Neil has already outed me on this show, so let's not beat around the bush here.
All right. What province are you from?
I am from Ontario. Thank you for knowing provinces.
Very good. Very good. I do. All right, guys. I wanna play something. Okay.
Ukraine, getting it settled, getting it ended, should have never started, would have never started. If I were president, it would have never started. I want to thank Tim Cook. He's a great man, a visionary, a businessman, just about every quality he can have other than athleticism. I don't know about that. I'm looking at him. I'm not 100% sure about you. You're a good athlete. I bet you're pretty good. I think he's good at everything, but I want to thank you very much, Tim. Thank you, sir. Congratulations. Thank you all very much.
Thank you, Mr. President.
All right. So Tim Cook went to the White House last night and brought Donald Trump. Let me read this.
An iPhone.
All right, here. First, they announced another $100 billion in U.S. investment. They're going to make some of the glass for Apple devices in Kentucky. I think that's a Corning plant. Okay, very cool. With trembling hands, this is USA Today, Cook opened an Apple box he said was made in California, took out a circular plaque with an apple-shaped cutout in the middle made of glass, apparently made in Kentucky, and attributed the design to a former U.S. Marine Corps corporal who now works at Apple. The plaque was set in a 24-karat gold base, Cook said was made in Utah. Is Tim Cook like a genius? Like this, what else would you need to do? He got Marines involved. He got 2 red states involved. There's a gold, 24-karat gold. That's it. That's the secret. Why is this so difficult for everybody else? Why do we even have tariffs? Why doesn't everyone just bring him gold? I don't know. Is that like for me as an Apple shareholder, I'm looking at that like, all right, good, problem solved.
Yeah, I think that's exactly it, right? You put on your shareholder hat and sort of separate the bizarreness of it all.
Yeah,
like,
get over it.
People are going to fight all day long on Twitter about like, oh, well, this is like, giving gifts to an autocrat and all these things. And like, well, okay, you can have that discussion, but like, just as a straight investor who needs to see that the companies that they invest in, they need to operate and execute. And what better way to execute in the world when you get the person who's basically running the world on your side?
The 24-karat gold base of this, whatever the thing is not the point. He's not a 6-year-old. It's the $100 billion investment in making glass for the phones in Kentucky. It's a step in the right direction, right?
Well, I look at it from not the perspective of a shareholder, but the perspective of a Verizon customer who now knows when I go to get my new iPhone in October that it's like I'm not facing nearly as much of a hit as I would have. But I think like this is just the proportional evolution of what the crypto folks have already done with Trump for some time, right? Like
Yes.
there is a playbook for doing this, for pulling this off, and for minimizing damage. The one who seems to have done it most successfully without kind of just purely through a public pressure campaign without really having to, pay the tithe, as it were, is Jensen Huang. Like just what he was able to do in terms of getting the H100s back to China, also helping AMD in the process there.
The
But
exclusions.
like that, yes, like so that kind of pressure campaign to me almost strikes me as more revealing. But like ultimately, what this tells us, and like kind of what every deal has told us, is that the inclination is not to blow everything up, right? Like you just have to do something, and the golden apple is like a hell of a lot of something.
Also, I don't know about how consistent like the track record of these big commitments are.
Oh,
like
they never actually do anything.
They never actually happen. Like
No, it doesn't matter.
every couple of years, you hear about some massive deal to invest for 6 or 8 years, or some time period where that president's not going to be around to even bother you.
Yeah.
And then some article comes out and says, "Oh, it turns out Foxconn didn't actually build that plant in Indiana." Or blah,
Look
blah,
at
blah.
he's screaming about Intel right now. Intel was supposed to make these huge investments, and I guess they're slow. Like I don't know.
Even the semi 232 tariffs that were announced, like think of how loose that is. All you have to do is like say you're bringing manufacturing back. At some point, have plans to do so. People can have plans for 4 years. That never happened, and now we're already running down the clock on that. So, hey, when TSMC is the biggest beneficiary in the market of a measure that's supposed to return domestic manufacturing investment to America, I think that's pretty telling as to how porous this is and how toothless a lot of this is. And toothless is great because that sector is on a fine trajectory as long as it's just not punished.
So I was just looking at this. Apple's total operating expenses from the report for the last 9 months was $46 billion. So where does $100 billion come from? Nobody cares, right?
It's not. I don't think that goes into OpEx.
I'm just saying,
And
their
I
total
think-
operating expenses, total.
I think a lot of this doesn't even come out of Apple's own pockets too. Like there's always like deals with suppliers.
Yeah,
and
Mexico's going to pay
vendors
for it.
Yeah, like there's usually something going on with whoever it is that they're dealing with, whether it's a supplier or a customer that they're
What does
selling.
it say that the thing that they're able to make in America after like 6 months of fighting with, or Trump fighting with them, is like glass? Not that it's not impressive, but like they're not making the M3 like advanced Apple chips.
Right.
So
I mean, it's possibly the case that the U.S. was always making the best glass.
no, they were.
Yeah.
It's Corning.
So
We've been making the best glass for 150
So basically,
years.
it's business as usual, but instead
Yeah.
of filing an 8K, you're doing it from the White House.
Yeah. Well, listen, that's how the game is played. There was another executive order today, or they're signing it today, or they already signed it. Everyone kind of knew this was coming. I think it's a big deal for Wall Street.
It's a huge deal.
Yeah. Trump will sign an executive order Thursday that aims to allow private equity, real estate, cryptocurrency, and other alternative assets in 401ks, a major victory for industries looking to tap some of the roughly $12.5 trillion held in those retirement accounts. So basically taking the risk away from plan administrators from saying, we will now allow these types of funds. I wrote about this on Monday. You guys think this is like game changing, or it's just another thing that might come and go and nothing really much will come of it? What do you think?
I mean, I feel like it's almost a continuation of the slippery slope of going from defined benefit plans to defined contribution plans, right? Where, just the fact that we can make our own, equity allocations in our 401k plans is a form of shifting that risk to the individual.
Yeah, for better or for worse.
Yeah, for better or
depending
for
on the
worse.
individual.
Yeah, so maybe it is the case that there's people who are very well educated and understand the risks, or will get educated, and it's like this is now a great opportunity to do invest in some of these alternative asset classes at a low cost. That said, it's not
Won't
for
be
everybody.
that low a cost.
It won't be that low cost.
Yeah.
Yeah, someone will surely clean up on it, but I think even the existence of people like us, talking about investing and having listeners who are sort of in control of their 401k plans already, you know, the reason why we exist is people are making terrible decisions already when it comes to their retirement
Yes.
savings.
Correct. Not
So-
everyone, but some people.
Not everyone,
Yeah.
but yeah, it probably just it makes our work more complicated, and and yeah, maybe people end up losing a ton of money on some of these. Maybe they make a lot. You know, who knows?
How much private equity do you want for your retirement account?
I will have zero. Just like
You'll have none.
Whenever somebody wants to sell me something, and the reason why is that the people they're normally selling it to have run out of room to hold it.
Yeah.
I generally find that.
I think that's the whole thing. Why are they going down market otherwise?
I think that's a big part of this, that it's like that it is a form of exit liquidity, and it's a pretty immense potential form of exit liquidity. In a previous life, when I was working on the other side of the street, we loved private markets for this exact reason too. Like you can't ignore the fees. The fees are what matters, and like over the long term, the fees are a compounding drag on returns. So,
I think I get all of this, but I think there's too much like, this is going to be terrible for the end investor.
I don't know that anyone's saying it's going to be terrible.
No, I mean, what do you mean? We just are. The
Catastrophic?
context of this conversation is this is bad. This is bad. People are going to lose money. Like that is the tone from everybody on Wall Street that's not working for these giant companies. That is the tone. Every blogger.
I think it's more like you're going to underperform.
Dude,
every
columnist, this is a terrible idea. This is expensive. It's exit liquidity. This is going to end badly. I'm not that like a doomsday on this. Do I think it's like a great idea? I don't know. Maybe, I probably wouldn't say it's a great idea. But let me just say this. Most people are auto-enrolling in target date funds. These instruments, these private equity, private credit vehicles will, I'm assuming, find their way into target date funds in a reasonably allocated way. I think there will be some guardrails. I think that it will be the giants. It will be the Blackstones of the world. It's not going to be a complete free-for-all and Wild West in your 401ks. And I think for the most part, it'll be a reasonable allocation, number one. And then number two, the other side of why is this even happening? These companies are staying private for way longer. OpenAI will come public at $1 trillion valuation, perhaps. Is everybody going to invest early in OpenAI? No, that's not the point. But the point is, the private markets are growing. Private credit is huge and is displacing a lot of the loans that banks used to make. And it is an evolving landscape, and it's growing and it's changing. So I understand all of the expensive exit liquidity. I don't think it's going to be that bad.
Do you think that you're going to see? So I know Vanguard is got an alliance with Blackstone.
But 2020.
You're going to see products, but I don't think they're going to be as expensive as people think they will be.
So Vanguard got into the game with Harbor Vest 5 years ago. And I think actually the introduction of a lot more spotlight on these things, fees will come down.
That's what I think.
I think a lot of bullshit will get cleaned up. And yes, people will have bad experiences, obviously, like with every other form of risk taking. But on balance, I'm not like, oh my God, this is the worst thing ever. I don't
think it's the worst.
No, but I'm saying that's a very in vogue thing to say, and I get why, but I don't think it's that bad.
Do you think this is the kind of thing that will lead to an actual sense of urgency where finally they require financial education in high school or middle school or
no, that will not. I would just my point would be we went through this already a generation ago. They wanted to democratize hedge funds. And nobody won. Like the retail investor did not get access to great hedge funds. Like we know that was not the outcome. And the way we know is all of these quote unquote liquid alternatives that were launched 15 years ago, none of them have good track records. None of them have raised a ton of money. There is a market for hedge fund like strategies. The best and the brightest managers of those strategies are not courting people with $5,000.
Yeah.
So it's like almost like a tautology. This idea of democratizing a sophisticated asset class, but by definition, somebody that's got a great product is not like, how fast can I get this in the hands of regular people? They only want very successful hedge funds want to work with the top investors. They don't want to have to educate investors in the middle class.
Yeah, you're 100%, but there is a difference between hedge funds and private credit and private equity. It's not the exact same thing. There is capacity with these hedge funds. It's a little bit different. But point taking, but listen, whenever anything needs to be democratized, of course your antennas go up. How could it not?
Yeah, I mean, how different is this from, the last SPAC boom right? Like at the beginning, it sounds really interesting and it attracts a ton of money. And then-
Democratizing the IPO process.
yeah, exactly.
Yeah.
And then when everyone realizes this is a disaster, then it disappears. So maybe this is a conversation that doesn't last very long because
Cryptocurrency in a 401k.
That could be
That could be a
dangerous.
disaster.
Yeah, that could be a disaster.
Like for a million. I don't know.
yeah.
What do you think is how did the crypto guys sneak in on this thing that Steve Schwartzman
well, you know what? The big
negotiated?
difference. At least the private stuff. At least you can't sell it.
they bring a gold-plated Bitcoin to the White
The
House.
average person will lose money in crypto in a 401k.
Listen, if we as a society are taking a very permissive stance towards what I would loosely call speculation, then like this is a pretty logical endpoint of it, right? Crypto as a asset to qualify, and in some respects, I agree. Like, is crypto any more speculative than a very small biotech company when it comes to serving as a source of funds, perhaps, or recourse when you're applying for a mortgage? No, it's not.
Junior
So
minors
like. In a lot of senses, the only place that I worry is like the classic joke about crypto is like crypto is just learning all the lessons we learned about the fiat system and they're doing it on speed drive. Like I would like the banking system, the traditional banking system, to not have to relearn lessons that we already know because crypto is getting sufficiently adopted and in places where there's either more leverage or consumer exposure.
You can't buy a standalone biotech stock in a 401k. Because the guardrails that exist are like you're buying funds, plan administrators. They're putting in these menus of like very diversified funds. They're not really doing sector bets per se as like the menu. But now you're going to introduce like, okay, here's a Bitcoin sleeve. You can either opt for it or not. I would imagine like most young people that have a 401k at work and all of a sudden they could put 10% into Bitcoin, they're going to do it. Like,
yeah, I mean, I think one of the bigger risks is this idea, this implication that because it's available in your 401k,
it's safe.
It's safe.
Yeah, I agree with that. I agree with that. That's like the unspoken thing. It's like, well, they wouldn't let me blow myself up with something in a 401k.
Right.
Not
and,
necessarily.
It's the same with like all the big asset managers that are bringing crypto onto their platform. It's like, that's when I'm going to invest in crypto.
It's a philosophical debate. Like we view the 401k as sacred. Like do not mess around. You can do whatever you want in your brokerage account, on chain, whatever, but not in your 401k. The other person would say, well, why not? This is their money. Why can't they do what they want?
Right.
Let's talk about the stock market. We have a whole bunch of charts. Who wants to take over and steer us through what's going on?
Luke, this is your stuff. Why this was the week that everybody posted the same thing. And I think it's not a mystery why. It's because we had the AI earnings reports and you had the shitty jobs report. And so this was the week that every content creator did the same thing. And Luke, you're one of those people. But you did it very well.
Absolutely.
You did it very well. So take it away.
The messaging is like the consensus now is that AI is powering the entirety of economic and stock market earnings growth, and everything else is kind of falling by the wayside. Do you agree with that conclusion or no?
I think it requires a lot of caveats around it, and caveats that I decline not to focus as much when I'm trying to tell the best possible story. But so a lot of the story, I think you can summarize last week as the week where a lot of people said AI is eating the U.S. economy and the stock market, and it completely deserves to.
Yeah.
So that is where we have now set the bar. How did we get there? It's a combination not just of the jobs report, but I also think the GDP report, which then showed when you add up Q1, Q2, first half of the year, you have ancillary AI spending as broadly defined as overpowering consumption in terms of the contribution to growth. Now, like that's where one big caveat is needed, and that's where I would point to a company like Texas Instruments. Not AI, not really AI, really the industrial automotive, but it's going to show up in terms of a lot of the chip ordering equipment that was done in Q1 when a lot of people are fearing tariffs. So that's when actually the big spike in a lot of this was.
That's interesting. So people just equate anything semiconductor related with AI now.
Yes. So that is part of the reason why it shows up so bigly in the GDP data. But the timing, Mike said, like it was just delicious and perfect. But I think the next part of the story is, okay, that's where we set the bar. We set the bar at you had Azure, you had Alphabet absolutely killing. And then what happens when we've set the bar at AI is the economy, it deserves to be the economy? Amazon comes out. Nobody was expecting Amazon to grow faster than Alphabet or Microsoft on the top line. In its cloud business, no one was. And then all of a sudden, after its earnings report, it's like, well, what have you done for me lately? You're number one, but you're losing market share. These other companies. So it's a bit of a double-edged sword in that I think the theme got a very big narrative boost, and it's a little bit of a bar that's harder to clear from here.
Okay, show me these charts. What are we looking at, guys?
John, chart us.
So
Chart us up. What is this?
This is kind of this has been one of my favorite charts lately. The blue on the right-hand side is the annual change in consumer spending. The green line on the left-hand axis is the change in S&P 500 CapEx year on year. One thing you'll notice in this chart, and it kind of has a logical underpinning, is you get CapEx booms for three reasons. One, it's the lagged effect of a big increase in consumer spending. Consumers want to spend a lot.
We got that. Okay.
Consumers want to spend a lot, so you have to produce more. Second is a big boom in commodity prices. That tends to be more localized. That's, I would say, really no longer an issue at the S&P 500 level because of how small materials and energy are just as a share of the overall index. So we can basically throw that out. It's not happening, but even if it were, not a great explanation for what's going on here.
Is electricity a commodity though?
Fair enough. I'll give you
Okay.
the on the data center side, that's definitely filtering through on the S&P 500 CapEx. And the third reason is our tax policy changes. So you do see like into 2017, 18 there, you do see a big jump in CapEx, and that I would tend to associate with changes in tax policy. But what you have here is a multi-year nearly streak of S&P 500 CapEx accelerating as consumer spending decelerates. Like this is it. This is the inherent tension in the market. It's how long, if at the end all we care about is the end user, like the hyperscalers customers, by and large, are everyone, right?
But it's enterprises.
Every large institution.
Enterprises are people, my friend.
No, they're not.
People work at them.
No, they're
People
not.
work at them. People are customers of them.
There's a K-shaped economy, which we spoke about in 2022, I guess, right? The K-shaped recovery. People with assets, people without. That theme has continued, and it's now inside the stock market in a big way. And I think you can see this continuation of the S&P 493, no margin expansion, although maybe that's coming with AI. But I think that this is the biggest question. Can the stock market survive a consumer slowdown on the shoulders of the hyperscalers? And I think the answer is yes.
It has been.
Yeah.
So so far the evidence is completely in your favor. We're running at last 6 months. Nominal consumer spending past 6 months up 1.4%. That's the slowest pace since August 2020 on a 6-month change. And stock market seems to be doing pretty darn well through this
real
time.
Consumer spending's actually down, I think, right?
But it's
in
weird.
real terms, it's down. Yeah.
Consumers are slowing down. They are picking and choosing, as they always do, but to a greater degree. Disney just had their record-breaking third quarter for the theme parks. How many years ago would you have thought that would have vanished? They went to Disney. People got it out of their systems. They still had a record at the theme parks. So people are maybe not spending on Chipotle bowls. Now, I know it's like a different thing, a Disney World versus a Chipotle bowl, but you hear from a million companies and they're all saying something a little bit different depending on where they are and where they fit in the value chain.
Yeah, the anecdotes are not helpful.
No.
Like they're spending at Disney but not spending at Nike.
Yeah.
What do you do with that
Or they're
information?
spending at Disney, but they're not spending at Six Flags. So
Or Josh's MGM Las Vegas Strip down 4% year on year. So that's a big one
but
there too.
somebody made an interesting point about Vegas. I forget who tweeted this, so forgive me for stealing this. Vegas is not the thing. People can gamble anywhere now. This is an artifact. We should not look to Vegas as a leading indicator.
I mean, this is an issue with any kind of sort of historical context.
Vegas is having its worst summer though.
Yeah.
Right.
Yeah. They literally have double-digit declines and
that's with the Backstreet Boys.
But you're saying
And the
that's
Sphere.
not the economy. That's new outlets for that gambling drive.
That is a
people have.
take that I lifted from somebody else. I thought it was astute.
Yeah. I think that's about right.
Well, Vegas would probably say that.
Can I give you another astute observation? Where is this?
Oh wait, just one real quick thing though. I think it's really important what you said. The key word here is growth, right? Like responsible for economic growth, the economic growth story, responsible for the stock market growth story. It is still the case that the consumer is massive. It's still 70% of the economy, whereas the spending on AI capex is
It's
mid single digits.
16
Six.
trillion of consumer spending versus 1.5 for capex.
Right. So if we're talking about like the economy, it's still the consumer. But if we're talking about what's defining the growth story right now, it's AI.
And the stock market, the earnings growth is coming from the AI
Right,
capex
right.
build.
Right.
Even today, like the Dow is down triple digits. The best performing sector is utilities, and like the third or fourth best is tech. Like that's
it.
it. It's
Yeah.
all one thing. There's nothing else working.
So
Yeah.
the stock market might be able to shoulder this, but can the economy? And you would probably not.
My answer is consumer always
Yeah,
wins, right?
yeah.
Like consumer always wins, and the consumer either wins by being so bad that it drags everything else down. Like I do not think you get the same rates of AI spending growth in an environment where the consumer is outright retrenching for a prolonged period of time.
You're right. There's no way.
Or the consumer wins because hey, like we're getting some productivity increases down the road or now from this. The wealth effect is lifting consumer or supporting consumer spending sufficiently in the near term. You can make the case that, as long as that coasts, that there's room for effectively there to be a decent floor under AI spending. But the consumer will always win in my mind. And that's why like so many people pay so much attention to myopically consumer labor market, because that is going to be in the end a huge beta driver.
So I want to caveat what I said earlier. If there is sluggish spending, I think the stock market can survive. If it falls off a cliff, then of course, I don't think it could.
Right.
All right. Brendan Duke tweeted, I've seen a lot of takes about how AI-related investment is preventing the economy from falling off a cliff. He said, I think this is wrong. In a still strong economy, my guess is that less AI investment would mean lower interest rates and, for example, more housing investment. I thought that was a good, I thought that was pretty clever.
Because the stock market would stop going up and the Fed would feel better about cutting rates?
Absent the hyperscaler spending, you would have a slower stock market and perhaps slower growth rates, and then therefore a stronger impetus to cut rates, which would maybe spur the housing market. I thought that was interesting.
But to what degree?
Except that the Fed is not supposed to be paying attention to the stock market.
Right.
So,
But they broadly pay attention to financial conditions, whatever that means.
Yeah.
But I mean, I'm sure that the wealth effect of a sluggish stock market is going to affect a person's desire to or ability to buy a house, right?
I would agree. Let's do chart 2. AI spending is eating the U.S. economy. So walk us through what we're looking at here.
Yeah, no, it's spending in green on information processing equipment and software. So again, broadly defined, there's going to be a lot of semi and computer equipment in there that is not necessarily purely AI, but you have to aggregate or disaggregate somewhere. That's the decision made here. And I was on the phone with Neil while he was making this tweet and this chart. And he was just like, I really want to show how much AI is juicing the economy. I'm
Neil
like,
Kavuta?
Neil did it. Yeah,
Neil Diamond. So this is personal consumption expenditures in blue.
And then
it looks like a nosedive. I don't know. It could bounce from here, but like.
I'm not going to do any TA on the economic data.
No, broke support.
But hey, like
broke support.
But again, like this is the story of something that green line once you aggregate, it's 6% of the economy, and it's adding more to growth than something that's 70% of the economy.
Yeah.
This is very rare. If you like go back and even just want to sum up like residential investment and consumer spending, we're running a lot closer to the lows of what we averaged through 2022 in real terms than even what we got during the new normal, which was this perilously slow time of like, we're never growing fast enough, we're never generating enough inflation, yada yada yada. So like it's a bit of an about face just in the composition of economic growth, and I think it leads to the question that is the Q3 question. So is the slowdown in consumer spending, is that uncertainty about tariffs, and we're now prepared to bounce now that we have certainty of what might not be the best situation, but hey, at least or is it the impact of slowing income growth and a bite from higher prices that will continue and perhaps accelerate in the quarters to come?
It's prices have not come down, right? They're not rising as fast as they were a few years ago.
But prices are down 8,000%.
Yeah. Prices will not come down stubbornly, staying high. Some are still accelerating. And people aren't getting the wage growth that offsets it anymore. And their biggest investment for 55% of the country, all of their net worth is tied up in a house. that is still difficult to sell. And
you have job creation screeching to halt.
And that,
basically.
right. And now we're averaging 35,000 new jobs a month for the last 3 months. And that's new because last year it was still gangbusters. So you have a less confident worker base. You've got homes that can't be sold. Prices are still high. And most of this tax reform that we just saw was just an extension of what already existed. It's not really a stimulus. It would have been a negative stimulus had they not extended it. So, like, yeah, the consumer is running on. I mean, not running on empty, but like running on fumes for sure.
Yeah,
a lot of those drivers are just not there.
Yeah,
Running on Empty is a great song. Josh, now is a good time. This just dropped. We announced the Future Proof musicians.
Oh, it's out.
It's official.
All right, let's do it at the end of the show.
Okay.
Let's hold it.
I'm curious.
All right. What's this 2 cyclical pillars? Put this chart up. Chart right.
This is what I was just talking about. Stole this from Connor Sen at Peachtree Creek Investments, and this is just the average quarterly contribution to GDP growth from residential investment and consumption during different periods. So 2025 year to date, those two things that, hey, Ed Leamer wrote the famous paper, Housing is the Business Cycle, right before the housing market crashed. So very good timing on that one. Consumer spending, we all know, huge chunk of the economy. Adding a 0.5 percentage point to growth on average. We're very close to 2022 when it was about 22 basis points added to growth on average. And again, doing so much better and steadier during a completely slow growth era. I really do think this underscores just how precarious the real spending and the frozen housing market is for the U.S. economy. Because I think for these things to have to change, you have to either think that job and income growth will pick up or long-term interest rates will go down a lot.
But interest rates are going to come down. So what if we get this beautiful handoff of the consumer slowing down their spending and then all of a sudden we get a housing boom? It's not inconceivable.
Not at all. Not at all. The thing working against that is we've already cut rates a few times and bond yields went up. Why did they go up? I would argue a combination.
Well, there was one rate cut, right? A year ago?
We got a few actually. Like we're down 75 basis points off the peak. So,
but where mortgage rates now, like 6.5-ish, 6.3. If it comes down under 6, I think you're going to see an explosion.
I just feel like though in the bond market there is a Trump premium in the front end because there is the idea that whoever the incoming Fed chair is going to be more predisposed to Fed cuts. That's something that predates the kind of recent bad jobs report that's caused a lot more pricing to get pulled
it's
forward.
Gonna be Waller. It's going to be Waller. And he's already on the tape saying it's time to cut.
I hope so. So there's that. There's a Trump premium in the front end. There's a Trump discount in the long end, right? Like it is more difficult to own U.S. bonds in a world where the administration has talked about taxing capital flows more, where there is more inflation risk because of some of the measures that are being pursued on tariffs. So 70 to 75% of the time, the 2-year yield follows the 10-year yield. We haven't been doing that for a bit, and we have some policy reasons why. That generally, I would expect that to be right, mortgage rates to come down on Fed cuts, but we've run this experiment pretty much over the past 8 months, and it hasn't really happened.
You think we could have 50 basis points worth of interest rate cuts between now and the end of the year, and the mortgage rate doesn't fall?
That'd be surprising.
Is that possible? That's not great.
I think that's possible. Like
okay.
I'd go with the 70% heuristic, but like I have to acknowledge what we've just lived through and the possibility of that repeating itself.
And there's still inflation out there too. So like, what if we are cutting rates? With
I don't think the
tariffs
interest rate causes the inflation that exists. So I have this huge disagreement on that with several people, that they think like the Fed can wave a wand and create either inflation or disinflation with a Fed funds rate. And it's not the thing. So right now, if you ask like, why is there still inflation in the system? I don't think it's because rates are too low. Like, I don't think anyone would say that. I think it's just a situation where we don't have layoffs. We have baby boomers retiring or being retired, but we don't really have like mass layoffs. That's the only way that you would actually get disinflation, and we just don't have it. And part of that is no immigrants in the labor force. Part of that's policy decision, and part of that is just the demography of the country and the types of things that people want to do for a living. So it's like, if you really want disinflation, be careful what you wish for. you need much, much lower employment. I don't think the Fed can really do that. So I don't know.
If I have one regret, I have many regrets. If I have one regret from the pre-pandemic cycle, it's the myopic focus on core PCE is 1.8. That means the Fed needs to ease policy because we really need to get that up to 2%. Like
they can't do that.
The idea that there can be fine tuning, the idea that like there isn't an acceptable range. Like for me, I think it's Greenspan who said it, but like inflation is a problem when people think it's a problem, when people are talking about it, when people notice it. I think there's a pretty decent range in which people don't notice it, and that's oftentimes the best you can do.
Right. And it's not a thermostat.
Yeah.
It's not, the Fed can't dial it in what they want their like inflation targeting. Like they actually don't have the power to do it because they have nothing to do with the housing market other than the rate of mortgages. They can't make more houses. So if you think like shelter is this like sustained cause of inflation, what do you really want the Fed to do about it? You want them to crash the housing market? They can't fine tune what the inflation rate is. They also can't print more people. So if like labor is the cause of inflation, well, what do you want them to do about it?
Right.
To go back in time 20 years and create more births? It's like almost a ridiculous concept. I understand they can hurt it or help it a little bit, but like in the end, they're not as powerful as we thought. They tried to create inflation for 12 years. It couldn't do it. It rates at 0%. Still couldn't get inflation. So I find that whole conversation where we're like ascribing magical powers to 12 people who decide the overnight rate. Could the Fed cause a crash? Yeah, totally. But they can't fine tune the rate of inflation that they want to say. Show me this AI didn't hear Nobel chart. This looks unsustainable.
This is what I do think this shows is two things. So this is the year-over-year change in the forward CapEx estimates for hyperscalers. So, where CapEx will be in 1 year's time, change over time. So that's Amazon, Oracle, Meta, Alphabet, Microsoft. What I think this shows is two things. One, that there is some implied economic sensitivity to CapEx estimates. The only time this rolled over was when effectively the post-Rose Garden scenario.
Day. You're right.
Yes.
You're right.
So the market assumes that AI spending is economically sensitive. That's like, let's take that as a given. That's something I would stipulate from this chart. The second is it bounced right back up and probably has a little further to go, perhaps in the near term, but you're right back up to the same rate of growth of more and more spending. That in itself is not...
What happened here when it dipped?
What happened when it dipped? Well, we got a policy reversal or a temporary policy reversal.
NVIDIA fell 40%. That's what happened when it
So
dipped.
we're just looking at the share prices of the five biggest spenders.
Not the share prices, the estimated CapEx, what they'll spend in CapEx over
So the analysts lowered their estimates on CapEx spending that fast?
Yes.
And then raised it right back up?
Yes.
Hysterical.
Yes. Like
Okay.
this is, but I do think this is a dial that, both tells you, hey, AI CapEx is going to be economically sensitive. And also we're law of large numbers, not to Andy Jassy it up, but law of large numbers is not applying yet in this instance, that you're still getting pretty immense increases.
It will in the growth
reason.
rates though. You can't triple and then triple again and then triple again. Like at a certain point, you won't be able to see that level of CapEx growth percentage wise.
Definitely.
I don't know where that is.
No, exactly. I don't know where that is, and it seems to be longer than anyone had expected. I also think a pretty slept on story is just the OBBA. One thing it did do is some of the changes to effectively how free cash flow will be treated.
Yeah,
incredibly beneficial for these companies. So if you think about how the
expensing of the build out,
full expensing, some changes around plant that's put in place this year, full expensing of that as well, and some changes to the treatment of foreign taxes. That effectively unlocks, hey, if you needed to tap debt markets for XYZ, well, you don't really have to as much. The need isn't as great. I don't think there's any lack of desire to finance projects related to AI out there, but it's just another window that will allow this to go on for a while.
All right, we've been 40 minutes on this topic. Is there anything else important that we want to hit on?
Any of these other charts before we move along? I mean, there's a lot in here.
It's all the same.
Nah.
They're spending a lot of money. TLDR.
TLDR, yeah.
Line go up.
Yeah.
Yeah.
Okay.
CapEx is driving growth.
Okay. Now, I do want to hit the.
Let's pivot from AI to AI.
Yeah, no, I do. Wait, what else did I definitely? What else did I definitely want to get to? Let's see, golden apples. Oh, one more chart from me, if you will, on this topic. Paul Kodrowski full on said this is a bubble, and he made a couple of really interesting points that I hadn't read or heard elsewhere. But let's put this infrastructure capex as a percentage of U.S. GDP by era. All right, this is the railroads of the 1880s, telecom. It says 2020, but I'm not sure if he meant 2000.
That's
all right. This is data from Jens Nordvig, who's also been on the show, and then AI data centers. So this is infrastructure capex as a percent. So he has AI data centers as 1.2% of U.S. GDP right now. And for the people listening, not watching, the railroads at the peak of their bubble got to 6%. But Kodrowski makes this point. Here, let me read this. Compare this to prior capex frenzies like railroads or telecom. Peak railroad spending came in the 19th century. Peak telecom spending was around 5G, fiber frenzy. It's not clear if we're at the peak yet or not, but we're up there. These are raw capex numbers, unadjusted for multiplier effects. In other words, just the purchasing and building of that stuff. And one of the things he points out is like, if you lay railroad tracks, it's pretty durable. You end up with something that's still usable 30 years later. At the rate at which these chips are like useful, and then, oh no, there's a new generation. I don't know what the long-term effect is of a lot of this equipment that we're spending money on. What becomes of a situation where a lot of this stuff becomes obsolete. So that's one element of this particular capex. You can call it a bubble or not, versus some of the prior ones. When we laid all that dark fiber 25 years ago, it was still usable. It just took a while before there was an actual use for all that video. I don't know. Any thoughts on that?
Maybe this is really great for the earnings of these companies because all this shit has to just continue.
Just got to keep making more shit.
You have to keep making more, and it keeps getting upgraded. It's a nightmare for people who have to pay for it, but maybe that's what keeps the economy going.
All right. We're good on that.
But wait.
What else do you have?
More.
What are these railroad charts? Are we doing these? Should we throw these in?
Oh yeah, I think it's all like kind of the same story, but so a different sort of angle on this. Instead of like talking about how massive all this stuff is, what I take away from this is it's possible for there to be an industry that completely takes over the economy, the stock market, the growth narrative or whatever. And maybe a couple of years from now, we're not talking about AI infrastructure and that goes away. But I don't think that necessarily means that it's the end of the stock market and the economy or whatever. Like something else is going to eventually emerge. So that's just sort of the short version of this. And the chart after this was, sort of another, or I guess after this one, is another angle on this. This whole idea of
like stock market dominance.
No, next one. Look up.
Well,
this one?
Yeah, stock market dominance. That's another one too. But this one I think is interesting in that this was a study that was cited by a Goldman Sachs research note a couple weeks ago, and basically the story here is actually I have the exact stat here. 60% of workers today are employed in jobs that did not exist in 1940. Over
60%.
60%.
Okay.
So over 85% of the employment growth over the last 85 years is from technology-driven creation, new positions. So the story being that, in the process of emerging technology, destroying all these jobs and, creating this nightmare for the workforce, it also figures out a way to create all these new opportunities for people. So again, this is just for the people who feel like there's some sort of doom story coming with AI. And maybe there is a doom story, but the historical record is whenever there's something that destroys jobs, something else comes through on the other side.
I don't know. I think we're seeing it already. You look at the last couple of jobs reports. I just don't think it's it's a coincidence.
Yeah. No, I think short term it's absolutely going to be a nightmare.
Yeah, we'll create new jobs. I don't know when though.
Yeah. I don't know when. It has to happen because if there are no people who are employed to buy stuff, then none of this stuff matters.
Do you worry about this?
I've been now tested directly against AI by multiple bosses in very different careers. So far, I've won both with flying
Okay.
colors. I don't know if I'll always keep winning it, but on the investing side and to
Do you worry about
Sam's,
this for like for like society? Like, do you think that because last week we did a show and we looked at the rate of college graduate hiring, and it's way down. Like kids right out of school, you would think those are the people that are most likely to be replaced by AI, would be like a recent college grad. And it's exactly like what people feared. Like they're just not being hired at the same pace. Now, I don't know if that's cyclical or if that's the AI revolution or maybe a little bit of a mix of both. So I'm curious like what you think about that.
it's incredibly difficult for me to disentangle that with like some of the trends that were in place. I think well before AI was really getting up and running. We've had a low hiring, low firing job market for years now.
Yeah.
So tough for me to disentangle. I await with interest, though I don't look forward to, whenever the next downturn is. Companies are always making decisions on OpEx.
But doesn't common sense just say that like the new entrants, what's the first job called? Entry level. Yeah, there we go. The entry level positions, maybe we don't need those anymore. And that's like the nightmare.
Anecdotally, it sounds like that's absolutely the case because there's at least an economic justification for entry level person because they can put together a draft of something that you don't like, do work that you don't want to do.
They're the least useful employer, and now you don't need them. And what happens when you don't need young people? It's catastrophic. And I don't want to go there, but how could you not start to think about that?
You're perpetuating your own demise when you do that.
Yeah,
I agree.
But you think like it's too early to say if we're already seeing the effect of it?
I think there's the companies who are adopting it the most aggressively are still basically saying, hey, we've done this and we've slowed hiring, we've frozen hiring. The use cases of companies that are out and out saying, we've cut jobs and it's because of AI. Those numbers
They're
are
not
still
say that.
There are
Like,
a couple who are still willing to.
Klarna said it, but then they reversed themselves.
Yeah.
So, you know who's not going to ever say that? Amazon will never say it. Because politically, why the hell would you say it? It's a crazy thing to say.
Yeah.
Like, good news, we no longer need to hire for the following positions ever again. Like, no one's going to really. A few companies are saying it because they're pre-public, like they're like pre-IPO, and they sort of have a window where they can be honest.
Elon would say it if it were true.
Yeah. All right. So we don't think that's definitely. I'm starting to think it's like sort of very much.
I think it's obvious.
All right, let's do this. Let's do this thing from JP Morgan.
What did you guys think about the commissioner of the BLS getting fired?
I mean, I think it's been pretty well argued that it's not great. Somewhere between not great and terrible.
Why? If the person's not doing their job, you get rid of him.
Yeah. So I think since everyone kind of agrees on that side, I'll go on the third rail and sort of try to advance what some of the counter arguments are, like the decent counter arguments.
Dalio said that the lady should have been fired.
I don't know if the person had to be fired. I don't know what process had to happen to get to whatever the endpoint is, but there seems to be a lot of arguments to be made that there is a way to overhaul the process and the workflow and the way they analyze the data so that it becomes more tight and more efficient.
Yes, only Republicans can count jobs from now on. That's the way that they want to. That's in other words, if you are an appointee of a previous president and that president wasn't Donald Trump, you can't be in that position.
That's like the irony of the announcement, like him accusing the former commissioner of being, tainted politically, but he's going to replace them and like it's not going to be a tainted position anymore.
Hey, any projections on next month's jobs number?
It's going to be amazing. Upward revisions all over the place.
Michael Feroli from JP Morgan.
Yeah, what do you say?
Potential politicization of the Fed has been much discussed over the past several months, but the risk of politicizing the data collection process should not be overlooked. To borrow from the soft landing analogy, having a flawed instrument panel can be just as dangerous as having an obediently partisan pilot. Here's the part in bold. As users of these data sets know, even small changes in the market share of private data providers can distort the signal on the national economy. the $2.1 trillion market for TIPS, that's Treasury inflation protected strips, is built on a foundation of trust in the construction of the CPI data, which is produced by the BLS. As such, the integrity of this data is at least as important as the employment data. So now you had a whole raft of people come out and say, well, we never believed in this data, and the quality of the data has been deteriorating because a lot of it's survey-based and people just don't respond to the survey. So the amount of people contributing to this data is down. And now you add on a layer of, well, Biden appointed this person who's responsible for the official tally. Therefore, it's bad data going in, and it's a fucked up politicized conclusion being drawn as a result of it, and I have to fire somebody. Okay, I feel like we could do that once. Are we going to now go through every single data point that the government collects and fire the person who's in charge of it? Because I don't think the market's going to love that. What do you guys think?
Well, if AI spending goes up, no, I won't make
AI
return
data,
to that.
AI
No,
data collection.
It's like if I'd pose like a couple of rhetorical-ish questions. Do you think you could collect?
Oh, the Socratic method. I love
Yes.
it. Let's do it.
Do you think you could collect accurately collect data on how many jobs are changing in a month in an economy with a couple 100 million jobs? I don't think I can. I think most people who would say yes are delusional.
My partner Barry says no.
Exactly.
This can't be done.
Exactly. Two, if you think you could, would you like more information to do so or more money to do so if given the opportunity? I think most people would answer yes to that. So do one of those two things. It's not just the response rate that's been going down. There's also been funding cuts in this regard, and the response rate is down. You can mandate responses, so you have less need to revise. A big reason for revision is responses come in late.
But you can't mandate the quality. What if people are like, click?
Well, the quality's already suspect. There's seasonal adjustments. There's like we have ADP, so we have like private providers of payroll data. They don't diverge that much. The BLS stuff and the ADP stuff, do they?
On a year-on-year, they don't diverge, but it's almost a joke now in markets. If ADP beats, NFP is missing. Like it's just happened too many times in a row, so it's now just a fun joke to tell. But over time,
directionally, they
on the
do
private
the same thing.
side, year over year, they track pretty darn closely. Like
Okay.
it's there. I don't know if this. I thought COVID would be like the golden age of alt data. I hope this doesn't spur the need for another one. But
Right.
that's still a TBD.
I'm getting breaking news now. It looks like the new chief of the Bureau of Labor Statistics has been announced. So Scott Baio. So I don't know if that affects any of your. All right.
Can we talk about Joe and Tracy before we get out?
Yeah.
Yeah.
Let's do that now. How proud of Joe and Tracy were you guys when you saw them this Sunday on the cover of the New York Times Sunday business section? I was so excited for us and for like our little world. To see them get that recognition.
Did Joe hire you?
Joe hired me at Business Insider in 2011. Yeah.
For those who are not sure what we're talking about, the Odd Lots podcast was featured in the New York Times, and the co-hosts, Joe Weisenthal and Tracy Alloway, friends of ours, and people that I think represent what we all do out here in investing in economic podcast land.
I think what's great
damn well.
about this is I think we all listen to the podcast and it's really good.
Yeah, it's
like,
great.
Every once in a while you'll see some random piece about someone you've never heard of and then you download it and it's just garbage. But this seems very appropriate. And yeah, absolutely, I'm proud of these guys.
And you worked were you at the FT with Tracy?
No, I worked at BI
were
with
at
Joe,
Business
and then
Insider.
I worked at Bloomberg with Joe and Tracy for a while. And like, God, it is amazing to see them get recognized for their amazing work. What this piece and no piece will ever capture is how many people they've brought along the way. It never will, because it would take how many sections of the New York Times to do that. I don't know. Joe is someone you can learn from, example from incredibly well. Tracy is someone who will take the time on every piece, not just to give you a fish, but to teach you how. In every case, she's made me such a better reporter. I've been so lucky to have these two as mentors as a business.
They're
love
absolutely
great.
amazing people. Like I literally sat across from Joe for years, and I remember there would be times when an intern or a junior person would sort of like creep up behind him and then ask him if he would take a look at a draft that he was working on.
Yeah.
And every single time he would turn around and be like, "Hey, how's it going? Oh yeah, sure. I'll take a look at it right now. Send it to me right now." He had time for everybody, no matter how busy he was.
Leadership. That's how he became Henry put him in charge of the newsroom.
Yeah.
Because he had that quality about him. Like he was there to make sure the finished product that they put out as a newsroom was like up to speed.
Can I tell you my favorite Business Insider tweet of all time? I think. Do you know what I'm going to say?
I'm not sure. There's a lot of them.
I'm
actually really worried. I'm nervous about this now. I'm nervous about this.
I think Joe tweeted it, and it was a video of you watching the World Cup. You might have been eating food.
Yeah.
And it was like an insane, it was an insane play. And you just very calmly said, "That's a nice goal."
Yeah.
Do you remember that?
Yeah, those were good times.
That's not the best
We
business.
spent a lot of time.
For me it is. Like that stands out. Those are simpler times.
This is the best Business Insider tweet ever. And I think it dates back to cluster stock. That's literally what the website was called. This was unforgettable. Henry Blodgett tweets an article that he wrote, LOL, a column, I suppose, or a blog post. Why do people hate Jews? And Twitter exploded. Just like these days, actually, you would be celebrated.
This escalated quickly.
Yeah. Why do people hate Jews? So wait, he fixed it. So he went back in. You're laughing because you know what he did.
Yeah.
He changed the title. He changed the headline.
The root causes of anti-Semitism.
Why do some people hate Jews? And then that made it even worse. And then it was, what are the root causes of anti-Semitism? Anyway, well done, Henry.
I don't want to add too much to that, but this is the inside sort of an anecdote from that period.
Yeah.
So the Business Insider newsroom was in basically something the size of an auditorium.
Yeah.
Very tightly packed.
I was there. I came to hang with you guys.
It's very noisy. There's a lot of typing. People are yelling. When that post went up, dead silence. And all you can hear were keystrokes.
And people opening their seltzer.
Everyone was G-chatting everybody.
Yeah, because it's the boss.
And he stands right in the middle of the newsroom.
Yeah.
We'll say in Henry, just in general, Henry Blodgett defense, tall man standing in middle of newsroom at standing desk, clearly A, running the company, and B, contributing to the editorial product. Best management style I have ever seen, undefeated.
Yeah.
Undefeated.
Do you guys know, did Henry start reinvesting his dividends yet?
I think he's okay on that end.
Okay.
Probably.
Yeah. But yeah, no.
Financially, he will recover from not reinvesting his dividends.
Yeah. But yeah, no, he was great. That was the first time I was in at a company where the CEO was right in the middle of the newsroom with everybody else doing this exact same thing.
Sure. All right, shout out to all the BI
They
alums
have the biggest
and
coaching tree of any reporter.
Can we put this photo up?
Huge reach.
This is Joe and Tracy at your wedding, Luke.
Yeah.
When did you get married?
Got married in, I should get this right, 2023.
Is Tracy pounding a Corona?
Yes.
And not a Corona Light. I love her. She literally is the best.
And Joe looks like he's mid-dance, maybe, perhaps?
I went to Joe's house in the Hamptons last summer for his birthday party. Were you there?
I was not there last year. I've been there the past couple before that.
All right, so here's what's cool about Joe. So I'm walking around the party. I don't really know anyone there, right? And I can't spend that long. So I'm there for like an hour. But I spoke to like a lot of people there. People come up to me, and it's always like, how did you meet? Like, how do you know Joe? He makes friends with everybody. Like, these are people that are like, oh, he used me as a source on a story 7 years ago. Or I sent him a DM and wished him a happy birthday last year, and he remembered me and invited me this year. Like, Joe is the true everyman covering economics, which is mostly covered by extremely elite kind of academic people who don't touch the crowd, don't get really deep involved in the subject matter, kind of look at spreadsheets. Joe, like, puts people on the show.
Yep.
Who do you have on the other day? A guy that makes pizza in Midtown? Guy. Right. Like that. I think that's why the show is so lovable.
And he had a baker.
Yeah.
They go very, very narrow. They're the best.
One of his, this is, I guess, the last thing I'll say. He had a birthday party once at Business Insider where he actually sent out like a tweet and a Facebook post and just had it open to everybody.
Yeah.
He said, anyone who's going to show up, we're going to go to this Chinese restaurant. And we're all going to have dinner here. And I think there must have been like 80 people showed up to this.
I was just saying, think about how insane that is.
And splitting a check with strangers. Are you insane?
Yeah.
And somehow it worked out.
All right, guys, this has been so much fun. Thank you guys so much for being here. We always end the show asking people what they are most looking forward to. So this could be anything.
I'll go first. Dinner with Warren Buffett. I can't wait. That's gonna be awesome.
Living or dead or alive? Well, how'd she ask it?
Either way, I don't know.
Living or dead? Who do you?
I'd prefer to be alive.
All right. What are you looking forward to?
I'm doing some late summer house cleaning.
Yeah,
I'm
good timing.
I'm throwing crap out like crazy. I'm turning into a full minimalist.
Okay. What can you throw out?
Clothes. There's definitely way too many random T-shirts. There's too many random pairs of shoes. There's too many. There's all kinds of kitchenware that I only used once. I mean, I'll give this stuff away. I'll donate to Goodwill, give it to friends and stuff. But like,
how many ladles do you need? Right?
You only need one.
Yeah,
you only need one ladle, man.
What are you looking forward to?
Yeah, what are you throwing away?
I'll do a twofer.
Okay.
First, Neil Dutta getting appointed to the Fed board. That'd be nice. Looking forward to that. On a more serious note, very, very delayed honeymoon planned for 2026. Going out on safari. Still very in embryo, but I am a lion lover, lion tattoo. Wow. Have a parallel screenplay for The Lion King planned at some time.
Okay.
I could not look forward to that more. I think it's going to be an incredible adventure.
What country do you fly to?
It is that embryonic that
okay, you haven't figured that out. You have to get shots for that too.
Yeah.
It's a lot. It's a big thing.
Yeah.
All right. I've never done it. And
you never will. That's
I don't
amazing.
If you met my wife, you
and
understand.
Sharon, you're going on a safari.
No, it's never gonna happen. Maybe Six Flags.
Animal Kingdom.
I'm looking at going back to my bubble on Monday. I'm going back to Boca, and I need to kind of get away from it all. So
the pre-future proof warm up. Oh, you didn't. You never told us the musical guest.
There you
so
go.
Can we announce this?
I've been requesting this for years.
Yeah, this is a big one for you. I agree.
Bush.
All right.
Bush is the headliner. Drum roll, please. All right, no, you can do the opener because this is you. So Bush is the headliner, and you guys might not know this. The opening act.
Wait, slow
Josh,
down. Back up.
Literally,
People don't even know what you're talking about.
All right, stop. They do. Future proof. They heard us. So there's a musical act. Bush is the headliner, and the opening act. Josh literally discovered them. They were like, Josh was walking in Merrick.
Invented.
And he saw them in somebody's garage, and he said, "You guys should be a rock band."
That did not happen.
Oh, I know who this is. Wait.
Josh invented them. Go ahead. Tell the story.
Right. Let's back up. For people that are listening have no idea what a Bush is, the band Bush is going to be the headlining act at Future Proof Festival.
Why are you infantilizing the audience? They know what I was talking about.
Not everyone listens every week. Some people
I said it
listen for
earlier.
the first time.
We got Bush.
All right.
Wait. Who's the headliner again?
Oh my God. The headliner is a band called Bush, and the opening act is Blues Traveler. So what do you think about that?
I remember hearing your story about Blues Traveler. That's amazing.
Yeah, dude, that's my story. I pretended that I invented Blues Traveler. It's not a real story. All right, guys, if you are working in finance or wealth management and you weren't sure whether or not you're attending Future Proof this coming September, now you know that you actually are coming. And we're going to get Michael up on stage at one point, I think, to accompany Gavin Rossdale on Glycerin.
Absolutely.
Can we do that?
Yeah.
All right. Duncan, you psyched for that lineup?
I am.
It's pretty
I'm
good,
more
right?
of a Blues Traveler person myself. But
Yeah.
both of them are good.
I think both are going to absolutely destroy. I think it's going to be an amazing night.
Yeah.
So that's the Tuesday night of Future Proof. All right, guys, this has been so much fun. I want to tell the audience where they can follow you for more of your writing and insights. Sam, we did the ticker. If you're not subscribed to the ticker, I don't know what you're doing.
Sam, what's your handle on Twitter? So at Delta One?
That's right. DE1TA, yeah.
Are you Walter Bloomberg? Wait, x.com/Sam Rowe.
Yep.
Okay. Luke, where do we follow you? How do people get your insights?
LJKAWA everywhere, pretty much, and Sherwood.news. Read us. We got a lot of great folks, not just me, a lot of folks a lot better than me.
You guys are killing it.
A lot of breadth and very impressed with what I've done.
Shout to Sherwood and follow at LJ Kawa everywhere on all social platforms and subscribe at Sherwood.news. All right, guys, thank you so much for being here. Thanks to the audience. Please like and subscribe, and we'll see you next time.